Good morning. Welcome to IG's early morning call. It is the new trading day ahead. We're waiting for the European markets to start in half an hour's time as we go towards the meat of the trading day across the European markets on this Thursday, the 4th of May. Let's take a look at the headlines as we look out towards the start of today's session. We continue to monitor what's happening in the wake of the Fed last night on interest rates. Concerns are now that a recession is now more likely, as the Fed said it's not likely to cut rates this year. Gold hitting a record high. Markets now waiting the ECB interest rate decision. In amongst the earnings today, Shell has beaten expectations, a new share buyback program in place, and we are awaiting earnings out a little bit later on today from Apple, from Moderna, from Coinbase. It's a packed agenda today. Let's take a look at what's happening in volatility. We are down today. Yesterday, we saw volatility spike up to levels not seen since the 28th of March. And that big move up yesterday was, I think, much of it coming in the wake of the Fed's announcement late last night. I said the prospect now for no interest rate cuts this year. And that was a bit of a body blow, I think, to the markets yesterday. And as we'll see in the next couple of minutes, as we see these markets perform over the last 8, 10, 12 hours or so, you'll get the feeling that I think people are really concerned about the fact that central banks are only really worried about one thing, and that is conquering inflation, which in the long term is absolutely the right thing to do. In the short term, we're going to see some increased volatility potentially. That being said, we are down today on volatility, which means possibly we could well end up seeing a little bit of a positive start at the beginning of today's European session. Look at the FTSE 100. As of yesterday's 24-hour market close, some really relatively big, hefty declines on the markets. You'll see this repeated across the 24-hour markets. I'll show you in the next couple of minutes. But we have, as I say, got money going back in today. And I just think that these lower highs that we're getting and these markets looking as though we are, with technical analysts looking at this 6704 as the FTSE potential low in this part of the where we are at the moment. That is the longer term expectation. I think momentum picking up on the downside, giving us a potential further downside to go on from where we are. It may be a little bit of a rocky ride in the journey, but nonetheless, that I think is one of the things to watch out for. German DAX looking a little bit more positive actually in the longer term picture, but you can see today's move up on the session at 15,784. There's a lot of European companies reporting this morning. Shell was just one of them, BMW, Volkswagen. We've got numbers out across the European markets in so many different sorts of sectors. But I think we are seeing gains across the board. French markets looking a little bit more like the London markets. Yesterday, as of the low point yesterday, we were at levels not seen since the 10th of April. Money going in at the moment, looking for a slightly stronger start on the session today. But this is what we were reporting yesterday, remember, and then we came those declines. But I think certainly the European Central Bank interest rate meeting, 1:15 p.m. today UK time. IGTV will be live on the platform at that time. And I think the market's really waiting that news to see whether or not there's a sort of equal hawkishness from the ECB. Overnight in Asia, Japan closed today. Greenery Day today, a celebration of nature, a really good excuse. Singapore, Straits Times, little move on the session today. Hang Seng Stock Index gaining, S&P ASX 200 ending with a small loss on the session. But all the action happening on Wall Street late last night, just the big figures, you can see declines across the board. The Dow was the one that took it on the chin as at the close of the cash session yesterday. Looking at the chart, you can see that of the candle shape yesterday, we saw this big spike down there to levels not seen since the 31st of March. So that was a low print for the month of April, wiping out all of April's gains. And the early part of May, this was the first day of May. At that point, we were reporting that markets were there at levels intraday not seen since the 14th of Feb. And since then has come some really relatively large, hefty declines, ending well off the lows on the markets yesterday on the 24-hour session. But the MACD pointing down, indicating momentum is picking up potentially on the downside. Yesterday, we saw a low on the S&P 500. They're not seen just in a few days. So this is a little bit stronger, I think. And the NASDAQ continues to be of interest because these tech stocks really are those that are going to suffer most if we don't see interest rates come down. That being said, I think if anything, this tech-heavy NASDAQ looking better. But of course, we saw bigger declines for the NASDAQ when we saw interest rates going up at that hurtling speed that we had from the Fed when it raised that massive 5 full percentage points in the space of a year or so, and that really did affect these tech stocks more than most. So this recovery looking a little bit stronger than perhaps maybe the Dow, but nonetheless, I think broadly speaking, there are many technical analysts around still saying that we could well end up hitting these October lows. In the case of the Nasdaq, that would be a relatively hefty decline. We've seen a 24% uplift since the lows at the beginning of the year. So it is really just a matter of how much steam is let out of these, how much air is let out of these tires as we have these markets pull back because of what we heard yesterday from the Fed. So I think we'll take a look in some more detail about what happened last night. As expected, the Fed did move on interest rates yesterday, moving its overnight interest rate by 0.25 percentage point to the 5 to 5.25% range. The Fed now has boosted its rates by a full 5 percentage points in 10 meetings since March 2022. At the press conference following the release, the Fed Chairman Jerome Powell said inflation remained the chief concern and that it was too soon to say with certainty that the rate cycle is over. That said, market commentators noted one change in the FOMC statement. The phrase anticipates further rate increases. That's been dropped. It doesn't mean that it's the end of the tightening cycle, but that from now on, each policy decision will be an open question. Jerome Powell also pushed back the possibility of a rate cut this year. Now, one of the big moves that we saw was the euro-dollar trade. This is the daily trade, and you can see we're bumping up against resistance at 110.96. And if and when we break that, it would then move the euro-dollar trade to levels not seen since the 31st of March 2022. Cutting it down into 1 hour segments, you can see here yesterday that candle there was the point at which interest rates were raised, and we heard that there's no prospect of an interest rate cut this year. And since then, we see money going into the euro dollar. So let's just assume that there is a continuation of this trend in place, and ahead of the ECB interest rate decision, you'd want to be long on this. If you are long at 110.82, your stop would go underneath the 110 level if you're a day trader, nice and tight. And your price target now, if we get a beat of this level of resistance at 110.96, 111.80 is the next line to watch out for, with the highs we saw back at the back end of March 2022. Now, the point about all this is the fact that many are now considering that a recession is now potentially more likely. With that loss in the dollar trade, we've seen a new all-time record high for the price of gold, punching through this 2075, giving us a new high for gold at 2082.7. So I can move that up there to take a look at that. Since then, we've seen a little bit of a pullback, but I think this increased chances of recession has really affected many of these large commodity markets. This is Brent. Yesterday, moving down to levels not seen since the 20th of March. And in fact, we got a market close yesterday at the lowest close we've seen since December 2021. So we're knocking on 18-month lows for the price of oil, falling further of analysts weighing the increased chances of recession. Just to add to this, US crude inventories yesterday fell for a third week in a row by 1.3 million barrels, according to the EIA. That was something that should have seen a little bit of a bounce in the price for, but didn't, because oil has been dominated by these fears about a potential global recession because of rising interest rates. So that's taking a look at what's been happening there in terms of the Fed. Later on today, the European Central Bank turns to what's happening there on interest rates. The ECB expected to deliver another interest rate rise by a margin of 25 basis points on the refi rate to 3.75%. The deposit facility rate and the marginal lending rate, same sort of percentage increase to 3.25% and 4% apiece. At the back end of last week, there was some pleasant news around GDP in both Spain and Italy, while Germany and France remain close to flat GDP quarter on quarter. And like in other regions worldwide, inflation remains stubbornly high. So let's assume that there is some sort of feed through into what's happening in terms of the expectations for interest rate rises and the potential for the interest rate picture to show some hawkishness around the intentions for the ECB. Let me take a look at GBP, Euro Sterling, EUR GBP, and bring up a chart of what's happening with Euro Sterling, because this is another area where we may see some of the market moves. What I bring up this chart here, we're currently trading at 88.1. If we do see a continuation of the rise for the euro, and we see it because of the euro rather than the weakness in the US dollar, we could well see this rise closer to this line of resistance. We've got at 88.75, 88.10 is where we're trading at the moment. That would be sustain a long position for the euro sterling trade if we get more hawkish rhetoric coming through from the European Central Bank. And that, for me, would mean not just a quarter point interest rate rise, but a warning that inflation is not yet overcome and the ECB needs to see this beaten before we can then move ahead economically. And if that's the case and they indicate that there are more interest rate rises to come, then obviously, presumably, money would end up going into the euro sterling trade. Let's take a look at some of the data out overnight. I won't show you any charts around this, but it was interesting nonetheless to see Chinese factory orders activity unexpectedly dipping in the month of April. The K-share manufacturing PMI falling to 49.5 in April from 50 the previous month. Economists anticipating a small rise to 50.3. Now, this marks the first contraction since the month of January. And in Australia, trade surplus widening to 15.25 billion Aussie dollars in March. It's the largest trade surplus since June 2022. Exports rising more than imports. Shipments rising by 4%, while imports rising by a margin of 2%. Later on in the States today, economists are awaiting initial jobless claims. The weekly jobless figures in the States anticipating 240,000 new claimants last week. Yesterday, ADP survey showing that the private sector created 296,000 jobs in April, almost twice as many as was expected. And now the focus turns to US jobs with non-farm payrolls tomorrow. Economists forecasting an average of 179,000 job creations in the month of April. The unemployment rate seen rising to 3.6% from 3.5% in the previous month. And average hourly earnings expected to rise by 0.3 month on month, 4.2% year on year, matching last month's rate, but interesting enough, retaining an increase below the rate of inflation. Now, let's move on to what's happening in terms of some of the corporates. A lot of companies out this morning with some good news. I'm just looking for my share price of Shell. Now, Shell, of course, in the last couple of days has represented what's been happening with the price of oil. But today, we've got this backward-looking number. It's a last quarterly profit, and it's an absolute blockbuster number. It made a net profit of $9.65 billion in the first 3 months of the year. Estimate to be for $8.14 billion. So that's a big beat there. Adjusted EBITDA coming through with a big beat as well, with the 21.43 billion, consensus at 18.8 billion. But I think for me, whilst we were expecting some big, heavy upside numbers, which is what we got, the fact that companies come through with another new share buyback program, this one of $4 billion, it's just finished one of $4 billion. So we were just calculating and looking at what Shell is doing. It's interesting to look at this in the context of some of the calls from political parties to have a new, bigger windfall tax on some of these companies. The company doing as much as it can to support the share price. But governments have got their eagle eyes on the amount of profits that these big oil companies are making. The problem is with Shell, and this goes back to when it was RDSA rolled up Shell, and it had one foot in the camp in Amsterdam, one foot in the camp in London. It decided to jump to London at the expense of its listing in Amsterdam. But these companies are agile. And if it feels that the taxation environment is not positive, they will move. And Shell will be one of those companies that will move if that happens. That's my opinion. But the opinion of the markets are that in a non-favorable tax environment, these companies are a lot more nimble, I think, than some of the political parties believe them to be. This decline we've seen in the last couple of days has really been all about the oil price. But we have seen record highs recently for the price of Shell. Intraday, back on the 9th of March, 26.13 was where we were. We're 23.21. We traded below the 200-day moving average for the first time in a month or so in the session yesterday. But I think this all adds up to a very positive situation for Shell. Staying on the chart, just wanted to quickly run through some of the other companies in view today. Next, maintains its guidance for annual profit after posting a 0.7% decline in the first quarter full price sales. The clothing retailer forecasting 1.5% drop in full price sales and pre-tax profit of 795 million. That was down from 870 million made this time last year. So I think there's a sufficient amount of negativity possibly to see this stock further on down. I just wanted to quickly highlight where we are in terms of some of the support. 65.54, 63.06 is a line of support, which were the lows we had back on the 5th of April. But you can see, broadly speaking, not too far away from recent highs at over 70 the share for Next. Staying on the charts again, just wanted to look at what's been happening with Vodafone. I think this could be an interesting stock to watch this morning. The stock will open at 96.5, and indeed we saw the highest close we've seen there since the 13th of March this year. According to the Financial Times today, Vodafone and CK Hutchison, the Hong Kong mobile communications company, close to agreeing a £15 billion combination of their UK telecoms businesses. This would create the country's biggest mobile operator. The agreement is expected to be unveiled this month, according to the newspaper. Let's stay on the charts again. Just quickly run through some of the other companies worth watching on the session today. Looking at the French listed shares of Airbus late last night, the company produced first quarter earnings after the close of the European markets. It reported a lower profit for the first quarter, announcing delays of the freighter version of its new A350 jetliner. We've seen recent highs in the stock up here at 129.70. The stock will open at 124.19, looking as though we could well see potentially a little bit of weakness there coming through from that stock. Let me quickly look at one other company in Europe that reported this morning, and a couple of others actually. This is Anheuser-Busch, which owns the Budweiser brand. It trades under the ticker symbol BUD. Reported higher than expected earnings today. The maker of Budweiser, Stella Artois, and Corona said core profit rose by 13.6% to $4.75 billion, compared with the 5.6 average increase expected in the company compiled poll. If you're long on this, going into the start of the day's trade at 116.879, then you put your stop underneath this line of support down here at around about the 115 level. Moving on, Volkswagen, another number to watch out for this morning. That stock will open at 150.157. Reported a rise in revenue of 22% to 76 billion euros, but saw a drop in operating profit to 5.75 billion after last year's first quarter profit book was boosted by commodity hedging. VW confirmed its outlook for 2023. Not sure where this stock is going to move. It's not too far away from recent lows. Digging deeper into the Volkswagen numbers, I haven't had a look at this, but it'll be interesting to see what it says about the electric vehicle business. As we heard the other day from one car company, Ford, suggesting it doesn't want to go down the road of cutting prices at any cost. And I'm not quite sure what Volkswagen's attitude toward this, but I was looking on the road the other day. A very attractive Volkswagen SUVs just come on the market, which is electrically driven. And these companies are now producing some really attractive electric vehicles. It's all about pricing, of course. Staying on the charts again, BMW is another one. Same sort of thing in terms of the electric vehicle business. Confirming its guidance, BMW carmaker posting a pre-tax profit of 5.1 billion euros compared to 12.2 billion last year due to one-time effects from the consolidation of its Chinese joint venture last year. Earnings margins rising to 12.1% in the first 3 months of the year. That's potentially a positive. That stock will open at 101.37. Another company to watch this morning. Qualcomm. QCOM is the ticker for Qualcomm. It's an all-session stock on the IG platform. It's a US company. Fell back 9% in extended trade last night after forecasting third quarter revenue and profit will be below Wall Street estimates, saying the smartphone industry would take longer to use up excess chips before fresh orders flow in. That was a big negative. You can see there, we went down to levels there not seen since, what was that, back end of last year, November last year, was where we were last at those levels at 105.44. Now, the COVID vaccine company Moderna is due to report before the market opens today. The biotech firm is expected to post its first quarterly loss in 2 years as demand for COVID-19 vaccines has now dropped. Moderna is forecast to post a loss of $1.75 per share. For the same quarter last year, it recorded earnings of $8.58 per share. Vaccine revenues anticipated to have dropped some 80% to $1.18 billion. As the fall in earnings and revenue growth is given, the market now wants to know how Moderna's management envisages its future and how it will get there. Let's take a look at what's been happening with its share price chart. You can see from the highs post-COVID, we were all the way up at this level up here at just shy of $500 a share. It'll open all sessions on the IG platform this morning at 9 o'clock, already having lost 1.25% late last night at $129.75. Moderna's CFO, James Mock, told the Financial Times recently that Moderna is not just a respiratory vaccine business. It's a latent vaccine business. It's a personalized cancer vaccine business. It's a rare diseases business. Yet up to now, its only marketable product. It needs to develop these drugs, which has had a big cost associated to it. The marketable product it's had has been for COVID, but research costs are expected to double in the first quarter to $1 billion. Thanks to COVID, Moderna has accumulated a capital of $18 billion, according to its CFO. 6 to 8 billion of that is to be spent over the next few years to develop its influenza, COVID, and RSV respiratory vaccines. The plan is to generate $8 to $15 billion in sales by 2027. That's one of the companies worth watching as we see all sessions continues today. Apple is scheduled to publish its earnings for a second fiscal quarter after the market closes tonight. Let's take a look at what's expected. The Street expects earnings to come at $1.43 per share compared to $1.52 in the same quarter this time last year. Revenue is poised to reach $92.9 billion, almost $4.5 billion less than last year. Analysts will be looking for any indication on how the group performed in China, as the country is now on the path to recovery. Not only China is historically Apple's most volatile market, but the region now accounts for almost a fifth of Apple's total revenues. I want to show you the share price chart. We've seen gains recently from the lows that we had back in December last year. This stock is up 37.6% as at the highs yesterday. Then came the drop late last night. Europe and the US market is still trying to assess the impact that central banks' tightening policies have had on growth. And you can see this potentially has a possible downside for Apple. But nonetheless, it's all about what's been happening with its products. Apple is massively innovative, as we know, and is a market leader in so many areas of technology. Be interested to see what the company comes out with after the bell tonight when we see what's going on under the covers in its fiscal second quarter. Also, after the market closes today, we got numbers out from Coinbase, the world's largest Bitcoin and cryptocurrency exchange. The Street expects a loss of $1.39 per share on revenues of $655 million, which would be some improvement on the fourth quarter of 2022, when the group recorded a loss of $2.39, revenue plunging 75% of that report to $629 million. So we're looking for a small increase in revenues. During its fiscal fourth quarter 2022 earnings report, Coinbase noted that crypto markets had improved, and indeed this continues to be the case. In January alone, an increase in volatility resulted in $120 million of transaction revenue. Take a look at what's happening with Coinbase chart itself. At 48.90, the stock is down. It shrunk 8.3 million users during the fourth quarter, down 25% from this time last year. The problem is for Coinbase is that it has a lot more competition now. And if you look at what's been happening with Bitcoin price on the market, it's risen where Coinbase has not. So you can see Bitcoin currently trading just below the 30,000 level. But there seems some really big gains. In fact, from the lows we had back on the 10th of March to the highs recently back on the 14th of April, it's a whopping 58.5% increase in the value of Bitcoin. Also out this evening, Lyft earnings. Analysts forecasting a loss of 8 cents per share on revenues of $982 million. Lyft forecasts will also be key. Earlier this week, its main competitor, Uber Technologies, posted earnings in line with expectations and better than anticipated forecasts, which has since sent the price to levels not seen since 2022. That's another all-session stock. Also, other US earnings scheduled today. Quick run through of the numbers. ConocoPhillips, AIG, and Peloton. For me, Peloton is the most interesting. This is a company that continues to trade under pressure. Remember that time when we were talking about Peloton being the future of exercise back in the dark days of COVID? Well, that's all sort of unwound, really, as we all want to get out and really rather ride our bikes on the road rather than in our front rooms. Earnings per share, we're looking for a loss of 48 cents on revenues of $711 million. That's it. A lot of companies to look for today. A lot of companies at the start of the European markets to watch out for. For me, Shell, I think, is the big takeaway potentially on the upside. A couple of automakers also of interest, Volkswagen and BMW in the German markets. But as I said, a ton of companies to watch out for. And of course, after the bell tonight, we've got Coinbase, we've got Apple, we've got Lyft, watching out for some of those stocks, and Moderna before the markets open. All trading, all sessions on the IG platforms. You can get a bite of these companies when they produce these figures. That's it. We're back at 10:30 with Charting the Markets.